Good afternoon, all. Hello again. I'm not going to introduce myself again, just to remind I'm Dara from Milbank. I'm very happy to have a distinguished panel with me today to discuss how the ongoing transformational disruption in how space and satellite platforms are being designed, developed, and deployed is similarly impacting the legacy approaches to space risks, how it's allocated, how liabilities are dealt with. We're going to tackle this topic of risk management, the new frontiers for risks for satellites. Let me very briefly introduce the speakers, and then we're going to get a video that will take us through, presented by Stephen of Marsh, where we stand in the market in terms of premiums, claims, trends, capacity, and then we'll proceed on to the interactive discussion. But before we do that, very quickly, from your left, or your right to your left, next to me here, Brent Perrot. He's the director at AscendArc. It's a company that's developing disruptive geo satellites at a cost, performance, and ease of use standpoint that is changing the paradigm. He began his career at AscendArc in 1993, had subsequent stints at Americatel, MTN, and American Tower. Subsequently founded a value-added services company called Hunter Communications, and he has invested and is heavily involved in AscendArc. Next to him, Fred Ho, Vice President of Engineering at AsiaSat. Fred's been doing this for a little while, I think over 30 years. He's had a tour de force in terms of responsibilities, orbital dynamics, teleboard operations, information technology, satellite operations, engineering. And so we're going to very much be leaning on you for the technical aspects of this. Last but not least, Stephen Monks, who's a Managing Director at Marsh Space Projects. Stephen joined in 1996. He started on the technical side, but since broadened his repertoire into things like policy wording, insurer negotiations, account management, dealing with clients in a very difficult area at times, particularly when you get to claims. He's handled almost all the claims that Marsh has dealt with for over 15 years, and now has to deal with end-to-end life cycle, which means finding the customers, onboarding the customers, placing the insurance, and occasionally chasing claims. So with that, Stephen, why don't we go through the presentation?
Okay. Just waiting for the first slide. Thank you. Yeah, so we've just got a few slides at the beginning here just to set the scene. I know each year we come back and talk to the sort of audience here about the space insurance market, and the sort of each year the story is slightly different. So really we've got 3 slides here to try and tell the story in a few minutes. So this is a chart put together by one of the leading insurers, AXA, that shows the annual premiums and claims. The premiums are the blue bars, the claims are the orange, and no prizes are spotting what the obvious sort of issue is in recent years. Is 2023 the very high number of claims losses that sort of outstrips the premium for that year by, well, at least a factor of 2. This is sort of what happens sometimes. I think we see again another loss in 2019 occurred. But there's another a sort of hidden aspect here as well we wanted to bring up, which is that the annual premiums per year in blue is really the size of the market, and that's really the key, the premium pot that the insurers generate that enables them to pay claims, make profits, and sort of consider what risks they take on. So you can see it's been diminishing. Now, one thing to mention, in 2023, when you had these big losses, the reaction of the market, as any of you who've bought insurance since, was that the rates went up significantly. They roughly doubled in that time. I think trebled since, if we go back to before 2019. Now, despite that big increase in premium rates, the premium bar, the blue bar, in 2024 remains kind of resolutely very similar to one in 2023. Part of this is due to the time lag of binding in launch insurance and so forth, but also part of it is reflective of the topic over the last few days, which is the decline in the number of large geostationary launches, the traditional sort of core business of the insurers. So this is really the story of the market, that it's reacted, it had losses, reacted in terms of the premium rates going up, but sort of experiencing a sort of, and as we know, this transitional phase of a reduction in the number of traditional geostationary satellites. We have other projects we're looking at, but they get to generate a similar premium volumes that if you go back to the left-hand side of the chart, you can see the premiums pretty consistently for the year, hovering around the sort of level of approaching $1 billion a year. So that has really kind of getting on for halved in the time. Okay, next slide. So this is where the insurance capacity comes from. And this chart is here showing broken out by sort of maybe some familiar sort of insurer names along the bottom. And the two bars are showing what the capacity they put up in 2024, 2025. So the marked thing here is the capacity that has been lost. So the guys on the right-hand side who unfortunately were there in 2024 and we find are not there in 2025. So that's, I think, another factor that the capacity in the market, these insurance companies, for the most part, space is one of many, many different classes of insurance they operate in. If the numbers don't add up, they pull out and put their capacity elsewhere. That's the sort of truth of it. So what we've seen is some capacity exit since 2024. Maybe not shown on here is we have had some new kind of companies coming in, attracted by sort of the increased premium rates and the potential for sort of for profit. But yeah, so overall the capacity is still there. I think as well, comment on the overall size. I think we're saying there 2025 launch capacity 640 million. So that's really a theoretical. We think sort of if you were to go out now and place a satellite in the market, even with a very favorable risk profile, it would only be, say, maybe 2/3 of that would be offered for support. So, and that capacity available drastically changes with the level of risk of the program. Okay, next slide. Oh, thought there was another one. Yes, there was. There we go. So this is the third part of it, which is the premium rate trend. So this is what the people are always interested in, is how much does the insurance cost? So these are very much aggregated market figures of all space insurance placements. So we can't read too much into the exact position of each point in time, but it does illustrate the market trend, which we can see. We came through, if you recall, the premiums and claim charts sort of back in the early 2000s, a period where the rates were high, we'd had some losses, the rates shot up and have come down over for many years, and really 2019 they started to go up and have been kind of increasing since, a few ups and downs along the way, but overall sort of have increased back. But still, if we go way back sort of to the early 2000s, the current rates are sort of not excessive on a historical basis. Now with sort of, I think is like all things, the sort of obviously the buyers of insurance have adjusted, and people have a certain, this kind of pricing volatility of insurance is quite difficult for satellite insurance buyers to cope with. There's a lot of volatility in the pricing, so when you're raising financing program, this is one thing that is problematic. But it shows again the sort of the rates increased, and yet again the premium volume issue remains. Okay, that's about it.
Thank you very much. It's a very helpful foundation for a discussion. The first topic I'd like to have the group tackle is the emerging gaps in space insurance market, and whether there are other models, other options in terms of dealing with balancing the risk transfer. I mean, this industry, and we've heard a lot about this the last 2 days and over the years, we're now really looking at, I would say, not just new, but disruptive new technologies, both on the hardware and software sides. I mean, Brent here next to me is talking about having a level of dynamism on satellites that is unheard of, right? We don't have legacy on some of these systems, whether it's more onboard processing, whether it's newer miniaturized components, as well as combined with these chunkier in-orbit losses that have been experienced over the past couple of years. So let's talk about it from the technology standpoint, and let's talk about it from the coverage and exclusion and claim standpoint. How do we rebalance that? So I'd like to hear first about the new technologies, what comes with it, what benefits do we earn from it, and then let's hear about how does the market try to get comfortable with that. So Brent, let's start with you.
Thank you, Dana. Is this on? Yeah. First of all, I wanted to say that was really interesting. You were like a teenage celebrity up there, because I never saw so many phones up there, except at my daughter's last concert attendance. So good for you, Stephen. You're now a teenage heartthrob. So it's interesting. It's been the insurance is being a challenge for us right now because, as you said, Stephen, there's a lot of legacy perspective from the insurance market, and it's not adapting so quickly, so well to the new space environment. So AscendArc is manufacturing a new geo platform that, as Dana mentioned, is going to revolutionize the cost per megabit delivered to the customer. And we're doing that. We're achieving some of those economics in part because the components are lower cost. They're off-the-shelf components. The traditional satellites were built with radiation-hardened components that could last 30 years and ultra redundancies and ultra expensive. And the approach of Starlink radically changed that to where they're using off-the-shelf components only designed to last for 5, 7, 10 years. And so have a higher level of risk, but from an individual satellite has a higher risk of potential failure, but they're also way cheaper and they're done in volume. And so there's an inherent risk minimization from that as well. And so it's a different perspective that I think we need from the insurance underwriter community.
So Fred, you have obviously a legacy in this industry, and you are now contending with, from a competitive and an operational standpoint, some of the new pressures. How do you see sort of a balance, if you will, or rebalancing of the risk distribution happening here? Because I know that AsiaSat's not tomorrow going to go buy a micro geo for half the price, but you have to be competitive. So how do you see the insurance and, frankly, the operational element of this panning out?
I think it's now. Okay, it's a time delay. Okay. Well, insurance bases on the historical data, and if any new component, new technology is going to be a challenge for insurance underwriters. So to understand a new technology, a new component, new device, how risky it is, and mostly people look at the design and also who makes it. But in terms of other than technology, I think the insurance underwriter also need to look at who is operating that new device or new component. First, I'll make an analogy is like when teenagers bought a racing car, two-door convertible. So I don't think that any underwriter want to insure that case, right? But if a driver has like a 30, 40 years old driving experience like me, and probably the underwriter will look at this case differently. So the insurance company, the insurance industry look at the new technology. I would recommend them, they don't just look at the technology, how new it is, or looking for historical data. I'm not saying they are not looking, they don't need to look at that. They need to look at that. But on top of that, they also need to look at who is on the driver's seat. Because the new technology nowadays is not like an on-off flip switch. Is that work or does not work? It has built in a lot of redundancy or level of operations, different workaround built into that subsystem. So if the operator or the driver behind the driver's seat really understand, really know the technology or know the equipment, the component, how to operate it, So even when hiccup comes up on a new component, new satellite, there's still a way to save the satellite, recover satellite without ending up with a catastrophic scenario.
Thank you. Now, Stephen, you had a very interesting presentation in terms of where we are, premium claims rates, et cetera. We've talked about technology. What we haven't talked about is that at the same time, over the next year or so, we're expecting some large risks manifesting on the market, whether they be Starship missions with a lot of insured assets on them, whether they be higher value, larger, another Viasat, large satellite, for example. And then maybe a little bit further down the line, we're going to get into the esoteric class risk with private space stations and the like that might be looking for insurance. Given the capacity, given where the bias is towards traditional players sort of not participating or participating at lower thresholds, how does the market solve this equilibrium? Is there a new equilibrium, and what will it take to achieve a new equilibrium?
Thank you. Yeah, I think it's an issue. I think a problem for the market is where someone's seeking insurance and can't get full support for their risk, so they end up with a gap, as it were. Now, I know some of the insurance underwriters not a gap sat, but there we go. But yeah, some of the underwriters you speak to think, oh, this is good. This will then keep premium rates high. But I said, no, I always say if there is an uninsured element to the risk, it's a problem for everyone because it sort of devalues the value of the product that we're providing. So really, I think sort of the insurers we saw in that chart before, I think are part of the solution. I think it's really a little bit down to sort of I think what Fred and Brent were saying about sort of there is sort of some onus on trying to convince the existing insurers of the quality of the risk and the quality of the people behind it, that it has a reasonable prospect of success, and the insurers should provide more of their theoretical capacity to support it. That's the first and most obvious solution. Outside that, I think one thing we've been looking at is other solutions, other financial tools, possibly to sort of try to fill gap, especially when we get these new emerging risks, because the business has changed, and the space insurance business is built around sort of traditional, a fairly uniform set of, say, 30 geostationary launches, and it provides capacity. Likely going forward, the demand for capacity from the customer seeking insurance is going to be a lot more spiky, for want of a better word. So how to cope with that occasional demand for a large amount of capacity is something, to be honest, we haven't yet sort of addressed, but it's something we certainly need to be looking at.
Let me be provocative to each of you, because you're talking about having non-insurance or non-property loss insurance maybe being a solution, whether it's investment loss or other types of insurance. I mean, one issue there may be, well, what's the premium look like? What's the coverage look like? But coming back to traditional insurance that's being written, how attractive would it be to you as operators, manufacturers, you, Stephen, as a broker, if we move to a paradigm of sort of an a la carte coverage system, where there could be coverage for certain types of losses, which you could sort of pick and choose, and those would have attributed certain premium. And that might make it more manageable to get partial insurance or insurance for things that you really cared about, and you would be willing to take the risk on as part of other elements that maybe the underwriting community does not want to touch yet. So in a sense, it'd be one method to redistribute risk using the traditional model versus trying to find a new model, which may or may not work. Fred, why don't we start with you in terms of how attractive would that be, sort of partial line item insurance for some things with you accepting losses on other things?
Well, maybe like a satellite not always like has like a full, the traffic or occupy all the transponders. So it will be a very good problem to have, like running out of transponder for the business. So I'm talking about like if there's some exclusion on the satellite insurance, like maybe the insurance need to look at the satellite asset, rather not look at the satellite as one single asset. Maybe they should look at the satellite as a fleet. So whether if one satellite, portion of a satellite has a failure that lower the capacity of that satellite, but if the entire fleet can cover that lost spectrum or lost capacity on the entire satellite fleet. So from the business point of view, it's not a loss on the business. Maybe the insurance underwriter should look at the satellite insurance from this perspective.
I fully agree. You made a good point. It's more about constellations, as you said.
That's right.
The majority of satellites being launched into LEO, for example, are parts of constellations. They're anywhere from a few at the very low end up to hundreds, and in the case of Starlink, thousands, tens of thousands. But spreading that risk over many satellites, each of which is less expensive than decades past, using much more replaceable, off-the-shelf components, as I mentioned. There's a lot of things you can do there. One, you can pick and choose, as you said, at the component level, that if this fails, you're not going to cover me because I have certain components that are I'm confident of, or you have built-in redundancies or what have you. I think the most striking thing up on that chart that you made, Stephen, was it was the last year. I don't know if it was 24 or 25. The level, the volume was at its lowest, but the margin was at its highest, right? So they're making really good margins off of the lowest volume that they have in the last 15 years. So to me, that's an opportunity lost on their part. That perhaps they can afford, with the higher margins that they're making, to do a little bit more due diligence on individual constellations, on a technical due diligence, to get more comfortable with the product that is being launched, and they're willing to take more volume risk on constellations, on satellites that have less heritage.
I would agree. I'd say there's one thing there, as we've seen, the insurers had a very bad experience in 23, put the rates up. To some extent, they've withdrawn a bit as well. Their sense of entrepreneurial spirit and willingness to take risks that are outside their kind of core appetite has diminished. So I think I'd agree with what Brent said, maybe now is the time for them to be a little braver there, because yes, it's only by doing that, as we know, the traditional geo market at that scale is unlikely to return. The opportunity for the insurers lies in the new and evolving technologies.
Not to complicate matters, layering onto the innovation and the disruptive evolution of the hardware and the software, we're now having spacecraft operate in a more potentially contested and hostile environment. Historically, underwriters have made it very clear in the policy wording that warlike activity, cyber, intentional events are not covered. Those are all excluded from coverage. Yet, the reality is that we may have situations where we don't know, or we can't know what kind of trigger caused a loss. Are there any options? I've heard of write back, I've heard of other things, but Stephen would like to hear what options there may be to deal with that kind of a risk, what it may look like. And Brent, Fred, is that something that you think operators or manufacturers will think it's important going forward?
Yeah, it's interesting. Yeah, anyone who's bought a space insurance policy, if you look at the back page, there's a page of exclusions of things that are not covered, which are typical, as you said, warlike actions, that kind of thing. So yes, at present, there isn't any viable option to write those coverages back in that you can do if you were in the running an airline or in the aviation business. They have similar exclusions, but an option to write back the cover for those type of risks. It hasn't existed in space until now, but only in very limited situations. One of the reasons being is I think the insurers probably lack the data they would need to evaluate those risks. There is a precedent for those war write back covers, because the data's there in the public domain for aviation risks, for example, or maritime risks, but it doesn't really exist for space. So I think that would be something as an industry we would have to sort of consider of how could we get the data to the insurers, because without that, how can they can price the coverage? But again, I would sort of say, wonder whether there is the demand there, because we have been without that right-back option for so many years. There's such a precedent of projects being financed and insured without that coverage. Is there actually an appetite there to take that cover if it were available?
Any views, Fred, Brent?
Well, I will say that Fred and I enjoy the fact that we're operating on geosynchronous. So if you had a bad actor wanting to hurt us, they have to have an anti-satellite missile that takes, that goes 50 times further than into LEO. So there is an inherent advantage there. But one thing to note, I have a bit of an optimist streak in some ways about. So there are some actors that have done some aggressive tactics that threatens the entire satellite community. But our lives collectively is so ruled by the satellites that we have in space. Can you imagine if GPS was knocked out? We wouldn't just go back to the 1960s. It would be worse. None of our kids know how to read a map, so they won't be able to go anywhere, without their iPhone and GPS. So I think every country has the perspective that ruining space with a Kepler event in low Earth orbit would be inherently self-devastating as well. So.
Well, thank you, Brent. On the concept that we don't want to engage in mutually assured destruction, and we don't want to get Andy's wrath for being late. Thank you very much. Please join me in thanking the panel.
Thank you, Dara, and thank you, panelists, for the amazing panel.